do have 4 people on the panel today. All of us are in the real estate side of industry. Lisa Dyer is a realtor. I am a mortgage loan originator. Stacy is business development with Stewart Title, and Michael Finney is an insurance agent. All of us work with people every day, and so we strategized what you need to know during a pandemic and how you can still be in the purchase market. So let's get started, and I want to introduce our first speaker, who is Lisa Dyer. She's a real estate agent with True Home Real Estate. Lisa.
Okay, thank you, Jessica. These are going to be the topics that I will cover throughout our discussion this morning. So let me go ahead. Last night, I went and jumped on our multiple listing service, and I looked in the total of Denton, Tarrant, Dallas, Collin, Wise, Parker, Johnson, and Ellis counties. And I wanted to see what's been going on in the last 7 days. So as of last night, in the past 7 days, in a total of these counties, there were just over 1,800 new listings that came on the market. And then between our active option contract and our active contingent contracts, we had about 1,700 homes that went under contract in the last 7 days. We also had just over 17 homes that moved into the pending status. And we had 1,800 homes that sold, that closed and sold in the past 7 days, as well as 209 coming soon homes that hit the market. So basically what this means is that we are still buying and selling here in the Dallas-Fort Worth area. It might be a little bit slower. Typically, the busy season for this area is March, April, May, and into June. And those people who have to buy and sell are buying and selling right now. Those that might be like yourself, that you'd like to, but you're just kind of playing the wait and see game and just kind of wait and see what happens with all of this. You're waiting. So what that means is that that busy season that we normally see in the springtime is going to shift and be in the summertime. So we're kind of forecasting a busy June, July, August, and possibly into September. And I see some of my colleagues' heads kind of shaking because I think that's what they're probably seeing, unless you're refinancing, and then those title companies and those lenders are very, very busy right now. So I'm going to take it and move on to our next presenter, which is Jessica. Jessica Olson is one of the preferred lenders that I like to work with. She is with Independent Financial Bank, and she's going to share a little bit about the mortgage industry and how everything is affecting that. Jessica?
Thank you, Lisa. Yep, we have a lot going on in the mortgage business, and I put together a rent versus own summary. So if you are a renter, what does that look like for you renting and paying out, say, $1,600 a month, which I think if you're in a family scenario, you're paying anywhere from realistically $1,500 up to even $2,500 a month in rent. You are in a category of people that could really afford to buy a house and pay a mortgage. And so what I did was I put together what it looks like. If you're renting at $1,600 a month, you still have your tax benefit that you get, from filing your taxes and everything else, about $447 a year. And when you look at the different options, you have conventional loans, which all the different loan types have a lot of different things going on. So I wanted to show you what it looks like. On a conventional loan, you're going to be paying on a $250,000 house about $1,995 a month. So you would see an increase of your monthly payment go up about $395 a month versus doing 20% down, which I know is not necessarily attainable for some people. So what that looks like is $1,551.23. Is that better? Can you guys see that? Okay. So we're sitting at 1551.23. If you did 20% down, which I know is kind of a hefty number for 250,000, that means that you have to have about $58,000 at your disposal to be able to buy this house. And that may not be manageable for a lot of people. But I want to take you over here to an FHA opportunity where you get some down payment assistance. Now your payment's at about $1913. That's lower than the other, but you only have to come up with like $10,000 to be able to get into a home. And I think that's what a lot of people don't realize is that right now, even during a pandemic, a lot of these grant and bond loans are still available. FHA is still available. There are some things that have come into play that make it very challenging. One thing to note is when you're looking at the different costs associated with closing, you're going to notice that we have all these different fees in here. There's a title insurance, and all of this is really kind of title fees all through here. And then down here, we've got insurance. Those are the things that's the reason that you've got these 4 people together is obviously you want a realtor to help you find the house. You need someone like me to help you afford the house and finance it with all the different options that are out there. And then you have title who's going to help you with the transfer of, ownership and insurance to make sure that, like, we're going to have hail today. When you get hailed on, you have a way of fixing it. So all of those things are factored into the cost of buying the home and how it breaks down for you. I think ultimately it seems really scary, but when you have a good team surrounding you, we can kind of show you based on what your qualifications are, where you would fall in line on any one of these opportunities. So I think, I don't know if anybody's got any questions on that. It's a lot of information.
Actually, you did get a question. And Lisa, you also got a question, but we'll start with Jessica. Somebody asked, can you use your stimulus check for like a down payment or during the transaction?
Yeah, actually you can. So say you're a married couple and you've got, 2 kids, you probably got about a $3,400 check. Well, you absolutely can take that money and put it in with your other savings that you have in your checking account. And if that puts you into that $10,000, $11,000 category, well, now you've got the money to go buy your house. So yes, you can use a stimulus check. What you can't use for your closing costs is money that you have hoarded in your house. So like a lot of people put cash in a safe. You can't use that. We have to be able to verify any funds used in a real estate transaction. So it has to be something where we can see the source of the money and where it went into the account and track it backwards. So did that answer that?
I had a question about, the 0% Fed rate that they keep talking about. Is that correlated with your industry, or how does that work?
So yeah, that's a good question, Mike. So the Fed dropped the interest rate to 0%, and that's really the bank-to-bank rate. So that's the rate of lending from, say, my bank to another bank. That's where that 0% interest is going to come in. Our interest rate is not derived from the same place. Our interest rate is derived from the 10-year bond, and that's really, mortgage-backed securities and things like that. And there's been a lot of talk you may or may not have heard. I hear it because that's what I do, but that's kind of where we get our interest rates from. And really anything, in my opinion, under 6% historically is awesome.
Yeah.
And we are still well under that threshold. So we are still in awesome territory.
Yeah.
So that's what I've got for right now. And I'll circle back and go through some more of this here in just a few minutes.
And Lisa, while she's unsharing the screen, somebody had asked if you sell, like what areas you sell in.
Anyway, so I can sell all over DFW. I do primarily do a lot in the Justin area, all the way over to Frisco. I can go all the way up to Denton normally, and south, I usually like North Fort Worth, although I have sold as far south as Burleson. So really, I can go anywhere. I've shown houses like in Mesquite, Rockwell areas, but probably the bulk of my clients are in like the upper northern Denton County.
And obviously you can get information about, certain neighborhoods and things like that. I mean, you showed us that clip earlier of all these numbers and all these different counties. So
Yeah.
It looks like the information is at your fingertips. Should you need
it is. And while I can look up like what houses are for sale in a certain area, and I can even kind of compare what's sold in the last 90 days just to help you make sure that asking price, is it spot on, or are they a little too high, or is it a good deal, that type of thing.
Yep. Do you assess how much you think a person or a client's house is worth currently, like, and help them on that end too, or are you just helping them search for a home?
No, absolutely. I have had clients who were thinking about selling their house, kind of wanting to know what they could sell it for. And when a real estate agent does this, it's different than if somebody comes to appraise your house, because an appraiser has certain criteria and things that they look at when they do that, where I look more at the trends. I'm looking at like what's currently listed, what's pending, what's sold. We like to stay in like the first 90 days of what's sold. But there's some areas that people buy a house and they love that neighborhood. And so not a lot comes on the market. So sometimes you do have to go out 180 days or even a year just to see what is sold in the market in those neighborhoods. So I'm looking more at trends to try to help you gauge a price. Ultimately, it's the client who decides to set the price. But hopefully they'll listen to to the guidance of what the market's saying.
Awesome.
And then we did have one last question. I think this one's directed at Jessica. What are they looking for credit-wise during this pandemic? Like, if credit ratings changed, like, if you could.
So yeah, we have definitely constricted with regard to credit. And I didn't think about it when we were setting this panel up. I do have a really great person that helps out with credit. And maybe we'll have a follow-up one of these with our credit person to come in. But realistically, and I had said this before the pandemic, and I will probably preach it to the end of time, you really need to be buying a house at 680 or higher. If you are under 680, it is still doable. It's just harder. And right now it's a lot harder. So if you are under 680, don't feel like, oh, well, there goes my chances. No, that's not it at all. You need a starting line. Anytime you are in a race, you have to know where the starting line is and where the finish line is. And if you don't know that, you might be running 2 miles the wrong direction. So find out where your starting line is. And if it's 600, if that's where your credit score is right now, well, why is it 600 and how do we make it 680? And I've had people get their score corrected. I just had a lady go from 689 to 786 in 3 weeks. And that was all because there was inaccurate information on the credit. So, there are ways to improve your credit that may or may not be your fault. And if it is your fault and it's something that you just neglected to do, then we can address that. We can come up with a plan to get you there. And it's all about planning, especially during a pandemic. You just have to know what it is.